All right. Assalamualaikum and very good morning, everyone. So for today, as a start, we're going to continue with ratios. Kita masih dalam topik 3. If I'm not mistaken, kalau I salah beritahu, as I can recall, kita stop sampai liquidity ratios. Let me share kejap. Okay, liquidity ratios. So as a recall ataupun as a reminder, so we've done the current ratio, the quick ratio, and also the net working capital. Okay, so the first 3 ratios. Okay, so next we're going to move on to the second category, which is the leverage. Okay. So leverage here, okay, so when you see the word leverage ratios, this is actually refers to the debts, hutang. Okay, so these leverage ratios will measure, first is the financial structure, how the company's punya financial structure. So when we talk about financial structure, we are actually looking at the composition. Okay, we know here we have assets, and here we have liability and also equity at the bottom. Okay, so when we talk about financial structure, we want to see the composition of the liability against equity. Which side is bigger? Is it liability or is it equity? Is it debts or is it shareholders punya fund? Okay, so that is capital structure. So by doing this leverage ratio, we can find this. Okay, and also ability to service that. So for these leverage ratios, 2 of 3 ratios too, the higher the ratio, the higher the risk. So when we talk about higher risk, we talk about the less desirable it will be lah. Kita tak nak the ratio to be that high. All right, so here we have 3 leverage ratios. Okay, we have debt ratio, debt to equity, and also times interest. So for debt ratio, we have the alternative name for this. Okay, besides debt ratio, it is also known as debt to equity ratio. Debt to equity, like debt to asset ratio. Debt to asset ratio. So what does it mean by debt to asset? So by looking at the name debt to asset ratio, we can identify what would be the formula. Okay, debt to asset. So meaning it will be debts on assets. Okay, so meaning debts divided by assets. So for this, for example, debt to equity, we know the formula would be debt, total debt, divided by equity. Okay, so let's look one by one again. Okay, the debt ratio, as I said, debt ratio is debt to asset ratio. So that's why they measure the proportion of the firm's total debt against the total assets. And hence the formula for debt ratio is total debt divided by total assets. And as I said earlier, debt here refers to leverage, which is also refers to our liabilities. Okay, liabilities, ataupun in fact measures the total liabilities. Okay, total liabilities of the company. And this indicates the amount of debt in the financial structure, which is the structure is debt dengan equity tadi kan. So the higher the ratio, the higher the risk, therefore it is less desirable. Okay, we want the ratio, debt ratio to be as low as possible. Okay, so untuk debt ratio, the lower, the better. Okay, the lower the ratio, the better for the company. All right. So again, let's look at the example from the past year punya question. So last 2 weeks ataupun during our first seminar, kita gunakan example ni ABM Motorist, and we've done the current and the quick ratio last time. Okay, so now we move on to the debt ratio. The third ratio here, kita ada debt ratio. Okay, and as you recall, the formula is total debts divided by total assets. And total debt is actually equivalent to total liabilities. Okay, and last week juga, masa our first meeting, kita dah label sebenarnya, cuma ni ada delete. We have labels like this is our current assets. Kalau ingat this is current assets. This is our fixed assets. And this is our current liabilities. We have long-term debt as our long-term liabilities. And these two are our equity. Kan? So for total debt, it's actually total liabilities. So when we talk about total liabilities, it's current plus long-term liabilities. Okay, that will be our total liabilities. So therefore, it will be a total of 164,000. Okay, 164,000 would be our total liabilities. So we add from account payable down until long-term debt of 120,000. Then you get 164,000. Okay, and we divide with total asset. So total asset, you don't have to calculate. Total asset is this much. That is 367,000. Okay, so the units. Kalau you tak ingat the units, beside dalam notes sudah ada tulis. Kalau ada soalan, you can refer here. The units is in percentage. So therefore, we have to multiply with 100. So here you get around 44.7%. Okay, almost 45% of debt ratio. So if you compare against the industry average, the industry average is 55%. So we can conclude here, this is about 45%. So the companies ataupun the ABM motorist debt ratio is much better as compared to the industry average because they are relying less on debt. Okay, you boleh komen macam tu. Okay, ataupun you can refer to here, ada kat bawah ni. So, cuma ni dia kata the higher the ratio kan. So dalam case ni ABM motorist has a lower ratio. So it reflects that it has a lower amount of debt to finance its assets as compared to the industry average. Okay, so that's debt ratio. Kalau ada soalan, just let me know. Okay, now we move on to the next one. Debt to equity. So for debt to equity, as I said tadi, the formula would be total debt divided by equity. Okay, from the name itself, debt to equity. And here, again, if I use this balance sheet, kita ada assets, liabilities, and equity. Right, and let's say I segregate liabilities and equity like this. Tadi, for our debt to assets, we take total liabilities on this side, on the top right side ni, we divide with total assets on the whole left-hand side. Right? But for this debt to equity, we're gonna focus only on the right-hand side. So it means we take debt, liabilities ni, we divide with equity at the bottom. All right, so that's debt to equity. So this is actually another way to look at capital structure. Okay, but the ratio will be in percentage as well. Okay, but potentially if the company is relying more on debts as compared to equity, the ratio can be more than 100%. Okay, you just imagine lah kalau total debt ni lagi besar daripada equity, obviously it's more than one kan, it's more than one, greater than one already. So if you multiply by 100 to get in percentage, we get more than 100%. Okay, so the higher the ratio is not desirable, less desirable, kita tak nak. We want it to be as low as possible. Sama macam that ratio tadi. We want it to be as low as possible. Because the higher ratio indicates that the higher amount of debt in the capital structure. Okay, because the reliance on debt will be more as compared to the equity. Okay, because if the ratio is above 100%, maknanya hutang dia terlalu banyak, we can say that way. So that's how we calculate debt to equity. So since the question doesn't have point of reference, I will not calculate for you lah, debt to equity. Nanti you can try calculate yourself. So the third one, we have times interest earned. So this ratio under times interest earned, this is the only ratio that under the categories of leverage, whereby the higher the ratio is more desirable. Okay, it's better. Okay, the higher the ratio, the better for the company, because it indicates first higher margin of safety, and indicates also they have enough profits to pay the interest, to serve the interest. So times interest earned ni sebenarnya to measure dia punya service of interest, capability untuk service interest. Okay, sebab when we talk about hutang akan ada finance charges, interest charges. Okay, so we want to see how good they have in terms of the profits. Dalam case ni, profit yang digunakan is earning before interest and tax. This is the level of profits that we use, earning before interest and taxes. And we want to see how much, how many times, but answer dia dalam times. How many times the ratio ataupun how many times the profits can cover the interest ataupun can meet the loan charges in the form of interest. So if they have higher ratios, it indicates they have a lower risk of default. Kalau ratio dia rendah, there's a possibility of default. Okay, so how to find this? Okay, so untuk soalan ni kita boleh discuss together because it's part of the question. The times interest earned for the industry average is 35 times. Okay, 35 times. So to find times interest earned, okay, the formula is earning before interest and taxes. We divide with interest. Okay, and again, last week, if you remember, the earning before interest and taxes or operating profit is hidden in this question. Dia hide from us. Dia hilangkan kat sini. Okay, and as I said last week, the earning before interest and taxes, dia akan ada in between of this operating expenses dengan interest. This would be our earning before interest and taxes. Okay, and there are two ways how to find these amounts. Okay, using top-down approach ataupun bottom-up approach. Okay, kalau top-down bermaksud kita akan gunakan information yang ada dekat atas arrow ni lah. So two items above it, kita ada gross profit, kita ada operating expenses. Okay, so maybe I boleh write kat sini formula dia. To find earning before interest and taxes, kalau di hidden, it will be gross profit. Okay, gross profit minus operating expenses. Minus operating expenses. Okay, then you're gonna get earning before interest and taxes. Okay, or you can use bottom up approach. Kalau di top down, from top and then going down. For bottom up, we're gonna start from below the arrows. Again, two items below the arrows. Kita ada interest dengan EBT kan. So it starts with EBT, earning before tax. Okay, sebab kita nak going up, kita kena add lah. We add with interest. Tengok nama dia pun tahulah, dia earning before interest and tax. So bila kita remove I, tinggal EBT. So in order to get EBIT again, so kita kena add lah the I value, the interest value to get EBIT. So in this case, kalau you gunakan top down, so 499,300 minus 90,000. So you have here 409,300. Okay, gross profit 599,300 minus 90,000. So 190,000. So we have 409,300. Or alternatively, you boleh guna lah 399,700 plus 9,600. You should get the same amount here. Okay, you should get the same amount. So now we know our EBIT. Okay, dengan guna EBT 399,700 ni is not EBIT, that's EBT only. So last time, tak sure kenapa dia tak nampak EBIT, dia guna alternatively EBT. No, you can find EBIT on your own based on this. Okay, and the interest, which is actually one line below EBIT. Okay, EBIT dengan interest ni sebenarnya dia set side to side lah, atas dengan bawah aja. So 409,300 and then the interest is 9,600. So we divide with 9,600. So 409,300 minus by 9,600. Minus pula, bahagi, sorry. 409,300 divided by 9,600. So you have here about 42.6%. Not percent, 42.6 times. Okay, 42.6 times. Okay, and you compare with the industry average, the times interest earned is 35 times. Okay, so remember, for times interest earned, the higher the ratio, the better, which indicates their capability to serve its loan charges. So here we can see that ABM Motorist times interest earned is better than the industry average, which indicates that the company has better ability to service its loan charges with a low level of risk ataupun with lower level of defaults, lower risk of default. Okay, so that's how you interpret the times interest earned punya results for the company. Okay, so because the ratio is higher than for ABM Motorists, so therefore they can meet the loan charges and also it will be lower the risk of default. Okay, so this is our second category, which is under the leverage. Okay, leverage ratios. So far we have 6, 3 liquidity, 3 leverage. So now let's move on to activity ratios. So for activity ratios, we want to see how the manager uses its resources. So when we talk about resources, mostly melibatkan assets. Mostly relates with assets. How they use their assets to generate sales. And we're going to have 5 different ratios here. The ACP, average collection period. We have account receivable turnover, inventory turnover, fixed asset turnover, and also total asset turnover. Okay, so you can see a similar pattern here kat sini. Kita ada turnover, ada part ratio with turnovers. Right, so general rule of turnover. Okay, dalam activity ratio ni the turnover, you can refer it as sales. Okay, you can refer turnover as sales. So for example here, kita ada total assets, then we have turnover. So this turnover, you can imagine this is actually sales. So by looking at the name, kita ada total assets, kita ada sales. So this is actually the items for the formula. Formula dia akan ada total assets, and the other side they have sales. Okay, so very helpful lah. The name of the ratio give us idea what will be the formula. That's one thing, turnover equivalent to sales. One more thing for turnover, okay, besides it's related with sales, kita boleh gunakan terms turnover ni sebagai indicators, okay, indicators of the positions of the ratios. So the word turnover ni also means you turn it over. It means the position you swap ataupun you flip, you turn it over position. So kalau ikut logical order bila kita baca total asset turnover, so masuk total asset bahagi sales. Okay, but that's not the case. Alright. When you see the word turnover, you can imagine as well that the position of the ratio will be different ataupun will be flipped ataupun will be turnover. So instead of total asset bahagi sales, okay, kalau you bahagi macam ni, you nampak total asset bagi turnover kan ataupun bahagi sales. But the turnover akan menyebabkan the formula will be flipped. So meaning it will be sales divided by total assets. Okay, so the turnover akan menyebabkan dia swap positions. Okay, but anyway, when you see the turnover later on, you akan nampak pattern yang sama lah. You're going to use sales and you're going to swap positions. But let's look at the first one first. ACP, average collection period. So for this ACP, we're going to measure in days. Jawapan dia dalam hari. how long actually the company will take to recover the debts, okay, to collect its debts from the credit sales. So this is, we are talking about the collection process. Okay. It's normal for companies to give out credit sales to customer. Okay. Maknanya ada customer yang akan bayar cash, ada yang bayar on credit basis. So you want to know how effective the company's punya collection process, how fast they can collect. Okay, so hence we can measure using this ACP, okay, average collection period. So the formula for this is actually account receivables divided by daily sales. Okay, since the answer is in days, okay, and we want to measure the collection, so obviously kita nak dia collect secepat mungkin, as fast as possible. So kalau lah the ACP is too high, okay, the higher the ratio, it indicates that the company might have problems in collecting debts. Okay. So how to calculate this? Sebab account receivable very straightforward, kita boleh ambil dalam balance sheet. But sales memang ada dalam kita punya income statement. But the question want to find the daily sales. So how to find daily? Okay. So there are two ways how to interpret this formula. First, you can find the ACP using account receivable and divide by sales. But since the question want daily, right? You divide the sales by 300. 360. Okay, you divide the sales by 360. Memang always 360 and not 365. Always 360 is about in ratios. In fact, in most of our financial calculations, we're going to assume that 1 year equivalent to 360 days. Okay, so this is one way to calculate the ACP. Okay, which should fit this formula. But alternatively, you can find ACP using, again, account receivable, but you divide with sales. Okay, sama je macam atas tadi. But instead of you divide by 360 at the bottom, you multiply 360 outside it. Okay, outside of the formula. So just like ratios of percentage, you bahagi and then you multiply with 100. So in order to find this, you multiply with 360. Okay, so you can use either one, and both will give you the same answer, the same results. Okay, so for ACP, we want to be as low as possible. The lower the ratio, the better the performance. So let's look at ACP, average collection period. So ACP is part of the question. The industry average is 20 times. Okay, 20 times. So for ACP, again, it's account receivable divided by sales times 360. So most of the time, I'm going to use this format to calculate. Okay, so account receivable is 30,000 from the balance sheet, 30,000, and the sales is 800,000, 800, multiply with 360. So here it's about 13.5, but since yeah, we're gonna round up je lah ni, it's around 14 days lah. Okay, about 14 days. So if you compare this result against ACP of 20 days, sebab hari susah kita nak guna point ya. So in days selalunya I akan round up, tapi kalau dalam times ataupun dalam percentage, I will keep it at least 1 or 2 decimals. So what can we conclude here? This indicates that this companies is better in terms of their collections than the industry average, and it shows that the company might have a less problem in collecting debts as compared to the industry average. Bukan bermaksud dia tak ada problem. You can say dia ada less problem. Okay, you're gonna have less problem in collecting debt as compared to the industry average because the collection is slightly faster. Okay, 14 hari as compared to 20 days based on the industry average. Okay, so that's ACP, average collection period. Next, we have the 4 turnovers earlier. I mentioned kan, we have account receivable, and then we have turnover. So as you recall, turnover ni equivalent to sales, and you flip the position. Instead of account receivable bahagi turnover, you turn it over the punya item. So sales divided by account receivable. Okay, so for this, since the answer in times, the higher the ratio, the better. Okay, the more effective the company. Okay, so for this ratio, account receivable turnover, still we're going to look at the receivable. Okay, so here, kalau you perasan, formula dia lebih kurang sama macam yang tadi je. Cuma dia opposite. Okay, so this is actually the alternative measurement of how they do their collections. Okay, but kalau tadi, the lower number of days, the better. But here, the higher the ratio, the better, which indicates that the company is more effective in collecting their debts. Okay, collecting their receivables. Okay, nanti you can try because the question doesn't have this. Dengar cara masuk. Boleh. Okay, so the next one will be inventory turnover. Kejap lagi bila inventory turnover, I will go back to the drawing board tu lah. So that's the account receivable. So the higher the ratio, the better. Okay, so the next one here is inventory turnover, and this inventory turnover will have a different interpretation in terms of the word turnover ni. Okay, walaupun I said tadi when you see the word turnover, you associate dengan sales and then you flip the position. So generally you akan nampak formula dia akan jadi macam sales divided by inventory. Okay, dia bukan salah but this is not a preferred ratio ataupun preferred formula. So untuk inventory turnover, we're gonna have a slightly different interpretation. Okay, but again, the ratio will measures the effectiveness of the firm uses inventory, in this case inventory, to generate sales. Kalau tadi, they use how they can recover the receivables kan from sales. Here, dia nak tengok how effective the company use their inventory to generate sales. Okay, but for this formula, instead of sales, they're gonna focus on cost of goods sold. Okay, cost of goods sold. Sebab when we talk about stocks, inventory ni stocks kan, stocks selalunya kita akan calculate based on cost basis. However, we can use sales, okay, if, okay, the word is if, if cost of goods sold is not available, kalau tak ada. Okay, but most of the time, cost of goods sold is available in the question. So therefore, we're going to use cost of goods sold instead of sales. Okay, ni secondary kalau tak ada baru guna. Right, just for inventory turnover, but the rest of turnovers ratio, we still gonna use sales amount. Okay, so again, the answer in times, the higher the ratio, the higher reflects effectiveness of using inventory to generate sales. So for inventory turnover, we have this part of the question. So inventory turnover. So inventory turnover, formula dia tadi is cost of goods sold divided by inventory. Okay, so the cost of goods sold is here, 301,500. And the inventory can be found here in the balance sheet, is 50,000. So 301,500 divided by 50,000. You get about 6.03 times. Okay, the answer in times, times. Again, we can compare against the industry average. So here, as you can see, the ratio is lower, so it's not as good as the industry average. So we can say that the ABM or trees inventory turnover is worse as compared to industry average, and this indicates that the company is less effective in using inventory to generate sales. Okay, you boleh guna balik je ayat bawah ni. Cuma dia akan ada less effective lah sebab dia punya ratio is lower kan. So it reflects that the company is less effective of using inventory in order to generate sales. Okay, so that's inventory turnover. So this is our third ratio for this category. And the final two ratios, we have fixed asset turnover and also total asset turnover. So we're going to go back to our first rule tadi. When you see the word turnover, we're going to use sales. And we're going to flip it over, dia punya formula. So fixed asset turnover is measurement of how the company utilize fixed asset to generate sales. Okay, so among the fixed asset, kita ada plant and machinery lah, plant and equipment. Okay, so the higher the ratio, the better, because we want to see the effectiveness of using fixed asset to generate sales. And for total asset turnover, okay, how they utilize the total assets to generate sales. So explanation here according to the name of the ratio. And both in times, both the higher, the better. Okay, so that's the fifth ratio under the activity ratios. Okay, activity ratios. So far kita dah ada 3 liquidity, 3 leverage, 5 activity. So far we have 11 ratios. Okay, so next we move on to the fourth one, profitability. So from the name itself, we know we're going to measure how the company gain their profits. Okay, so this measures the relative success of the firm that combine all the effect from the first three categories, liquidity, activity, and leverage. So most of the ratios, you're going to see kita akan ada 6 ratios kejap lagi. So 5 out of 6 ni, we're going to expect to have a higher ratio, the better. Okay, but out of these 6, akan ada satu ratio yang indicates one, the lower the ratio, the better for the company. Okay, only 1 out of 6. So maknanya 5 tu, the higher the ratio, the better. So these are the 6. We have gross profit, operating profit margin, net profit margin, ROE and ROA. Okay, so the one yang lagi rendah lagi bagus, which is this one, operating ratio. So the rest, the higher the better. So first kita tengok dulu You're gonna see the pattern. We have 3 margins here. So again, kita boleh associatekan juga margin ni with sales. Okay, so when you see gross profit margin, you know ada gross profit, you know ada sales. Operating profit margin pun sama, ada operating profit and also sales, net profit and also sales. But unlike the turnover, whereby we flip the position, right? For this margin, we're not gonna flip it. So we're gonna use as a logical order je. Meaning, when you see gross profit margin, you know ada gross profit, ada sales. So you just simply take gross profit divide by sales. Okay, in logical order. Similar like operating profit margin, similar like net profit margin as well. So from the name of the ratio, it gives you idea what will be the formula. Okay, similar with ROE and ROA. We have 2 returns here. Okay, 2 returns. So return kat sini, you can associate with the return of the company. So what kind of return? So we're not looking at sales atau revenue, we're looking at net income. Okay, net income of the company. So when you see return, we know it's net income and it's on equity. So maknanya kat sini is net income divide by equity. Sama juga kat sini lah, net income divide by assets. So for profitability ratios, the name of the ratios help us a lot in terms of identifying the formula. Okay, but again, let's look one by one. So sebab I dah explain tadi, I'm going to go quite brief kat sini lah sebab it's very straightforward. From the name, it's actually the ratio punya formula. So here it measures the ability of the firm to control the variable cost. So the variable cost ni actually our cost of goods sold lah. Okay, sebab the cost of goods sold akan vary against the number ataupun the units sold. Lagi banyak company tu jual, lagi tinggi variable cost dia. Okay, because dia kena multiply dengan units yang dijual. Okay, so gross profit margin will be in percentage. So multiply with 100 please to get in percentage. Again, the higher the ratio, the better, which indicates they have a higher contribution margin. Okay, when we say contribution margin, it shows higher gross profit lah, basically. Okay, so it's higher gross profit and lower cost of goods sold. Right. So, I just nak tunjuk in the question, you akan nampak ada banyak level of profits. One of them tadilah kita ada gross profit margin. Kita ada operating profit margin is this one. And kita ada net profit margin, which we will use this one. Okay, so since saya dah buka ni, let's say kita nak try to calculate gross profit margin So the formula is gross profit divided by sales. Okay, so the gross profit from this question is 499,300. And the sales, 800. Don't forget to multiply with 100 to get it in percentage. So 499,300 divided by 800 times 6%, so it's about 62.4%. So what does it mean? Again, kita tak ada point of reference to compare, so kita tak boleh lah nak comment whether it's good or bad. But alternatively, we can say, okay, from the total revenues or sales that they have, 62.4% will be converted into gross profit. Okay, 62.4% will be converted into gross profit. So another important point of the ratio, we can use it as a forecasting punya tool juga sebenarnya. So meaning kalau lah kita play around dengan sales amount, kalau kita estimate next year, katakanlah kita nak naik our sales to 1 million, let's say lah. So we can estimate, okay, kalau lah sales kita 1 million, we're gonna earn about 624,000 as our gross profit. Okay, so that's alternative way the usage of ratio lah. Okay, cuma untuk soalan ni, like I said, kita tak ada point of reference, so we cannot say whether this is good or bad lah, as compared to the industry average. But we have here is not net profit margin. So without looking at the notes, like I said, the name of the ratio can help us identify the formula. So kita ada net profit, kita ada margin. So we know the formula will be net profit divided by sales. Okay. So the net profit is 239,820. And our sales is 800 lah. Times 100. So 239,820 by 800. So it's quite high juga ni. It's about 29.9%. It's almost 30% lah. Almost 30% net profit margin. And again, if you compare against the industry average, the net profit margin for ABM or tourists is slightly higher ataupun slightly better to the as compared to the industry average. So for net profit margin, we can see that ABM or tourist net profit margin is better as compared to the net profit margin, because therefore, yeah, the company is able to generate higher profits from their respective sales. Okay, tu nanti kejap lagi kita refresh balik masuk dalam net profit margin. Okay, it's also better income to the shareholders. Okay, so this is net profit margin. But we have to go back to number 2. We also have the second level of profit, which is operating profit. And as you all know, operating profit is also known as earning before interest and taxes. So they might use the word operating profit and earning before interest and taxes interchangeably between one to another. So technically it means the same. And we still divide by sales value. Okay, so the higher the ratio, the better in percentage as well. So don't forget to multiply with 100. Okay, and the only ratio with lower ratio is desirable, which is the lower the better, is operating ratio. So operating ratio is actually the alternative way of operating profit. The only difference is still we're going to divide with sales, but instead of operating profit, okay, we use the expenses, operating expenses. Okay, so this is the alternative way, and also since we are measuring expenses, obviously kita nak cost ni lagi rendah lagi bagus lah kan, because we are talking about cost, not the profits. So when we talk about costs, we want the cost to be as low as possible. Okay, so bear with me kejap. So between operating profit margin dengan operating ratio, okay, so for operating profit margin, we're going to use earning before interest and taxes for 09,300 divided by 800. For operating ratio, we're going to use operating expenses, which is 90,000 divided by 800. Okay, so that's the two differences between operating profit margin and operating ratio. Okay, operating profit margin, the higher the better. Operating ratio, the lower the better. Okay, but again, both we cannot compare sebab dia tak ada dalam soalan. So next, we're going to move on to the final two ratios, the return ratios. Kita ada return on assets and return on equity. As I said, the return refers to net profit ataupun earning after tax. Okay, by the way, net income equals to net profit, sama je, and also equals to earning after tax. So all of these are referring to the same thing. Okay, net income, net profits, or earning after tax. Okay, semua refers to the same thing. So for ROA, return on assets, it measures the overall effectiveness of management in generating profits using its available assets. Okay, so assets, as you all know, refers to the investment, kan? So we want to measure how good the management to utilize the assets in order to generate the net profits. Okay, the net profits. So for this, the question other measures ROA. Okay, the ROA for the industry average is 50%. So if you want to calculate the ROA, return on assets, ROA, so it will be net income divided by total assets. Okay, so the net income is 239,820, similar like our net profit margin just now. But instead of divide by sales, we divide with total assets of 367,000. 8 times 100 because the ratio is in percentage. So here we have around 65.3% return on assets. So imagine dia ada assets worth 367,000. This company managed to earn net income 65% of the total value of assets. So how effective the company can generate income. Okay, total asset ada 367,000. Dia earn to 39,820, which is equivalent to 65% of the value of the total assets. And this is much better as compared to the industry's average ratio of 50%. Okay, company biasa boleh generate 50% je, but this company can generate 65%. So this is better performance. So we can say that the ABM Motorist has a better ROE as compared to the industry average, which indicates that the company has high returns on the firm's asset investment. So they generate income generation ataupun net income generation too is much better as compared to the industry average. So it means that the management is more effective to generate profits with all the assets that they have. Okay, so that's ROE. And lastly, for ROE, return on equity. So we're gonna divide the net income against the total equity. So again, the answer is percentage, multiply with 100, and the higher the ratio indicates higher return to the shareholders, because when we talk about equity, it refers to the shareholders portion of the shares dalam capital structure tu. Okay, so the higher the return, the better off for the owners of the company. Right, so again, the question tak ada ROE for comparison, so I will not show you how to calculate lah, but you can calculate if you want actually. Net profit divided by total equity. So what kind of total equity? Bear with me. So kita dah define tadi equity kita yang ni kan, so you add these two lah to get your total equity. Okay, so that's our 4 categories of ratio. Okay, kita ada liquidity, leverage, activity, and also profitability. So far, we have 4. And as you all know, this paper used to have final exam. So this is actually our final exam. Okay, maknanya final exam yang terakhir was in December 2018. Right? And in fact, for the past semesters daripada yang ni, previous ones, okay, dia punya structure question dia akan nampak lebih kurang sama je. Okay, meaning the question will ask us to calculate ratios comes from 4 categories and a total of 8 ratios here, as you can see. Kita ada current quick debt times interest earned, ACP, eventually turnover, NPM dengan ROA. Okay, and if you categorizekan all 8 ni, you're going to categorize it according to this is liquidity, debt dengan times interest earned, this is your leverage, ACP dengan inventory, this is your activity ratios, and these two are your profitability ratios. So that's why dia suruh comment pun based on liquidity, leverage, activity, and profitability. So they saja je jumble up so that you know they want to test you which one is which lah. Okay, but anyway, since we have 4 categories and dia ada 8 ratios, so most of the time ataupun I can say all the time sebenarnya, every category dia akan tanya 2 je for each. Okay, again this is based on final exam. Since you don't have final exam, you don't have to comply dengan this rule lah. Okay, but this is what happened last time. Okay, setiap satu kategori ratio tu dia akan tanya 2 ratio. Okay, so for those with 3 ratios in a category, for example macam liquidity kita ada 3 kan, so it's much easier to predict which ratio will come out. For example, for liquidity ratio, the question asks for the current and quick. Okay, and I can say 100% most of the time ataupun all the time, memang 2 ratio ni je dia akan tanya. They will not ask about net working capital. Okay, so that's one of the thing lah. Okay, so what I want to say here, some of the ratios last time is quite easy to predict soalan mana yang akan ditanya. Tapi again, since you don't have an exam, I will not go into detail lah. Nak predict yang mana satu kan, sebab tak ada final exam pun kan. But so, that's about it. Kita ada 4 categories ratio yang akan ditanya semasa final exam. However, if you remember the categories, kita ada the 5th ratio, which is market ratios. These market ratios was not part of the final exam. Okay, tak pernah keluar final exam. Okay, but we are not looking at final exam anymore kan. We are looking because for the financial ratios, this will be your basis for your assignments. Okay, for your assignment. So therefore, I can ask you about market ratios in your assignment. Right, so therefore, even though it's not part of the exam before, but for your assignment, you need to know about market ratios as well. And why market ratios is not part of the final exam before? Because the information required to calculate the market ratio is not part of the balance sheet ataupun income statement. Information tu tak ada dalam balance sheet income statement. So therefore, we cannot calculate. Okay, but for you guys, for the assignment, you can find your own information tu. What kind of information? Information like market price. Okay, market price of stocks atau market price of the shares. You need to find the number of shares outstanding. You need to find this as well. Okay, which is beyond the balance sheet and income statement. Okay, and if you look closer, market price dengan number of shares outstanding, this is not available for all types of companies. So what kind of companies? This is based on public listed companies. Okay, so that's why when you want to do your assignment later, okay, I mentioned about it last meeting, I will encourage you to select companies which are public listed companies only, because all of this information you can find it on the web, okay, online, and very vastly available online, so you don't have to find it somewhere else. Semuanya available online, boleh cari very easily. Okay, so here we have another 6 ratios. Okay, sama macam assignment jugalah. Your assignment, you don't have to worry sebab kita ada berapa tadi? Liquidity we have 3, leverage we have 3, that's 6, and then activity 5, so 11. Profitability 6, that's 17. Another 6 here, so total of 23 ratios. So I will not ask all 23 ratios will be in your assignment. I akan pilih je. Okay, but which one? Nanti tunggulah bila I share you the instruction. But anyway, we have 6 ratios under these market ratios. So again, kita boleh tengok some similarities. In the form of per share, ada 3 ratios with per share. So when we have this ratio per share, we know kita nak cari dia, kita kena divide by the number of shares outstanding in order to get per share basis. Okay, but anyway, let's look one by one. So earning per share or EPS, it measures the amount of earnings available for one stock. Okay, so the formula is, again, remember, earning after tax can be found in the income statement. Okay, masih information yang sama macam sebelum ni, but we don't have this before, number of common stocks. So number of common stocks also refers to NOSO, NOSO, which is number of stocks outstanding. Okay, so this is actually NOSO. Okay, this is NOSO. Number of common shares ni is number of stocks outstanding ataupun number of shares outstanding. Okay, so for earning per share, the answer will be in ringgit. Okay, with higher ratio, the better, which indicates that it's better income for the shareholders per share basis. Okay, and again, I cannot use the example for the final exam tadi because we don't have this information. Okay, so I can explain to you je lah. Right, so earning after tax, get from the income statement and then find the NOSO. But to find the NOSO, maybe I can share a bit how to find it. It's not part of your income statement or even the balance sheet. Okay, but you can find the information based on the notes. If you recall, last time I cakap, in the statement of financial position ataupun the income statement, they're gonna show with you the notes. And note lepas tu ada numbering kat sini. So these numbers, okay, of notes ni, they will explain in details what are the items under cash and short-term funds. For example, number 7 ni, what are securities available for sale. Okay, but the one yang concern you, okay, the one that concern you when we talk about number of shares outstanding is about equity. So equity, dia ada dua ni. Ada dua items kat sini. But obviously for number of shares outstanding, you can try to look at item number 25. Okay, number ini tak fix lah. You have to look at the account of the company of your chosen ones. And carilah notes dia kat dalam ni. So kat sini selalunya dia akan mention lah how much is actually the number of shares outstanding. Okay, as you can see here, the share capital remain constant je kan. Usually because of that lah. Because the number of shares dia remain constant. Unless they issue new shares, then the number of shares akan increase lah. But anyway, that's how we find number of shares outstanding. Okay, next, number 2, we have dividend per share. So similarly, we have dividend per share. So the shares outstanding here are actually referring to also juga number of shares outstanding. Okay, walaupun guna terms yang berlainan, just to let you know how to familiarize with different terms that they use, but actually they refer to the same thing. Okay, kalau tadi earning, we take earning after tax. For dividend, we use cash dividend. Okay, cash dividend. So this cash dividend can be found in income statement kalau ada. Okay, kalau tak ada, mungkin letak dalam notes as well. Okay, so the answer again in ringgit, the higher the better. It indicates that the firms believe that the growth will be sustained, therefore they bagi higher dividend. Kalau company yang still growing, dia akan bagi dividen yang rendah. But company yang high ratios, high dividend, selalunya company dah stable. Okay, dah stable enough. Number 3, we have dividend payout ratio. For dividend payout ratio, we use the first 2 ratios, DPS and EPS, earnings per share. So this ratio indicates the amount of current earnings available to the stockholders paid out as dividend. Okay, so for DPR, dividend payout ratio, this is actually can be explained alternatively using this example again. Remember, company earn net profit. What they do, they're going to pay dividend. Okay, and the rest of the money akan masuk dalam return earning. Okay, so what does it mean? From the total net profit ni, kita nak tahu berapa persen would be paid out as dividend. Hence the name dividend payout ratio. So if I put a number here, let's say lah, the net profit for the company is 100 million. Contohnya. So if the company decided to pay dividend with a total of 30 million kat sini, we know the balance of this will go into retained earning. Okay, we go into retained earning. And to know the dividend payout ratio, simply take dividend divide by net profit. Okay, so that's why alternatively, if you can see here, dividend per share bagi earning per share. So kalau you buang per share basis ni, it's actually dividend bagi dengan net profit. So earnings tadi is earning after tax ataupun net profit kan. So if you remove the denominator of NOSO for both ratio, you buang NOSO ni dengan NOSO ni, technically is dividend divided by net profit. That's why alternative way to find the ratio, in this case, it's 30 divided by 100 is 0.3. Okay, so the answer is in ringgit, which is dalam case ni is 30 cent lah. So you can say that for every 1 ringgit profits, net profit, they will give 30 cents dividend, which is quite high lah sebenarnya. But this is again is illustration. Okay, and alternatively, kalau you tak nak guna RM, you can use percentage as well. So dividend payout ratio can be measured using percentage. So kalau 0.3 is about 30%. So 30% of dividend, 30% dividend is 30% out of the net profit. Okay, so again, the higher the ratio, the better to the investor lah. Okay, because you can see how much willingness of the company to pay out dividend payments. Right. So as investor, kita nak dividend payout ratio need to be as high as possible. Number 4, dividend yield, which is also known as the current yield. So for this dividend yield, the formula is dividend per share divided by market price per share. So for this dividend yield, we cannot simply strike off per share ni, sebab price per share memang value dia memang price per share. Macam yang tadi, the underlying per share, we have no so. We have number of shares outstanding. But market price per share, in the share market, okay, dia memang express the price per share basis. Kita tak ada price in total. So therefore, for dividend yield, we're going to use DPS in total. Kita tak boleh guna dividend in ringgit. Okay, kita tak boleh guna 30 million ni. Kita kena guna 0.3 ni. 0.3 ni dia punya dividend payout ratio. Kita kena guna dividend per share lah. Tak ada example tadi. So let's say lah dividend per share ada, I don't know, 0.5, 50 cents contohnya. So you're going to use 50 cents divided by whatever values of price. And again, the answer in percentage. So multiply with 100. So, dividend yield tadi yang kita dividend yield. So the dividend yield indicates the percentage of returns as compared to the dollar they invested. Okay, again, the higher the ratio, the better to the investor. Okay, second last, number 5, book value per share. So this will be based on common equity. Common equity, again, we divide with NOSO. Okay, remember when we have per share, mostly kita akan bagi dengan number of shares outstanding. So book value here refers to the value of common stock ataupun common equity. Okay, cuma perbezaan common stocks, the value of book value ni, the book value ni as compared to market price, selalunya dia tak tally. Okay, in short run. Okay, but in long run, the market price tends to be above the book value. Okay, maknanya kat sini harga yang dijual di market is more than the book value. Book value ni, in other words, this is the par value. Par value of the stocks. Okay, so this is the original value based on accounting. Dalam account tu kita guna book value, tapi bila you nak jual, you can jual based on the market price. Okay, based on the market price sold in the market. Okay, and lastly, number 6 is PE ratio. So this is another ratio which is quite popular when we want to measure the performance of the company. So PE ratio stands for price divided by E divided by earning. So technically it's market price divided by earning per share. Okay, so this is from our first ratio. Okay, I have mentioned about NOSO just now, where to find this NOSO. But I haven't explained about price tadi, lupa nak cerita. So where to get this price per share punya information, similar like here. Sebab ni tak ada place nak letak, maybe I go back to here. So macam mana nak cari price per share? So this price, market price per share ni, you can find it in multiple sources lah on the internet. For example, you can look in Bursa Malaysia kalau ada. Right, you can find the market price per share in Yahoo Finance. Okay, you can use the Star punya portal juga, the Star Business tu, or Market Watch punya portal. Yang satu lagi, you can use Morningstar. This is another portal you can use, Morningstar. Okay, so all of this information ataupun portals can be used to find historical prices. Remember when we do financial ratios, mostly kita buat based on historical punya reports. 2019, 2018, 2017. So some of the portals hanya tunjuk current punya price. But for historical prices, you might need to visit any of these in order to find respective prices lah. Price tahun 2018, 2017, you can find dalam Morningstar contohnya, ataupun Yahoo Finance pun boleh juga. Okay, so these are the sources. So again, that's why I said is the information required is beyond the statements. So dalam case ni, kita boleh gunakan external portals. Okay, so that's all the ratios that we have. So all 33 ratios. So related to your assignment, sekejap lagi saya tunjuk lah, ataupun sekejap lagi explain. So dalam notes ni, there's some example how to calculate, but I showed you using the past year question, but untuk test balik your understanding how to calculate, you can use these examples because they have answers as well kat sini. Anyway, we're going to discuss about the analysis, how we can analyze the ratios. So there are 3 ways how to measures the ratios, because ratio standalone, kalau kita calculate ratio without any comparison, we can say it's worthless ataupun useless analysis. Okay, so therefore better to have these 3 ways of interpretation. Number 1 is trend analysis ataupun what we call as time series analysis. So when we set time series analysis, what we're going to do, we're going to choose one company. Okay, and we compare against multiple years. Okay, one company with multiple years. Okay, that's why it's known as time series. Okay, we take one company, company A, and then we take at least 3 years of data, and then we measure the performance. So when we talk about time series, selalunya kita boleh measure guna graph. Okay, is it increasing? To the drop, to the increase balik, when the drop balik macam tu. Yeah, it all depends on the performance of the company in long run. Okay, that's why 3 to 5 years is the minimum lah. The longer, the better. Okay, so from the trends, the performance can be found whether it's improving or declining. Okay, so that's one trend analysis. Just one company. Then kita compare against multiple years. The second types of analysis is comparative, okay, which is cross-sectional. So comparative ni similar like what we've done for the past year question tadi, whereby you compare ABM motorists versus the industry average. Okay, so this is a compare. We compare two or more companies within the same time frame. Okay, within the same time frame. So what does it mean here? We have multiple companies, but we're gonna measure it 1 year je. Okay, 1 year. So same time frame. So company A and company B for the year 2019, for example. So that's comparative. We compare one against another. It can be companies within the same industry, or we can compare against the industry average. Okay. For your assignment, I can say it will be based on companies within the same industry. Okay, bukan industry average. Industry average ni sebenarnya tak wujud. It's just a figure, just an average. Okay. But for your assignment, for comparative, you're gonna choose different companies within the same industry. Okay, and the third one is combine. So the word combine, we know lah, will be the most complete, the most informative approach because it combines trend dengan comparative. So that's why for your assignment sebenarnya kita akan gunakan combine analysis. So meaning multiple companies with multiple years. Okay, so this is what we're gonna do for multiple companies with multiple years for combined analysis. So you're gonna have selalunya akan letak four members lah in a group. So you're gonna have at least 4 companies. Each one of you akan pilih satu company from the same industry. Okay, and we're gonna have a minimum 3 years lah sebab dia minimum 3 tahun. So I'm gonna set 3 years of data, recent ones, 3 tahun yang terkini. So now it's 2021. Okay, but I can say that majority of companies don't have 2020 punya data yet. Okay, so therefore the minimum I can expect will be 2019 lah paling latest, and then go back 3 years. So 2019, 18 and 17. Okay, so that will be the 3 years of data that you need to find for the company of your choice. Okay, so how you gonna choose your company? So every company, I tak ingat berapa orang dalam grup kita ni. Let me check. So kalau dalam ni ada 28, I'm tak sure, mesti ada yang tak datang. Katakanlah 28. So you're gonna split into 4 members in a team. So kalau 28 bagi 4, you have 7 groups. Okay, you're gonna have 7 groups. So each group, you have to choose one industry. One industry. Kita ada banyak industri. Dalam usaha Malaysia tu, you can check the industry, the subsector tu. Okay, kita ada financial services, kita ada property, kita ada healthcare, kita ada apa lagi? We have telecommunications, transportation, logistics, a lot of industry lah. Okay, just choose one industry for your group. And dalam group tu ada 4 members kan, so each member kena pilih 4 companies within the same industry. Kat sini tak nampak try tengok dia tak. Dia tengok dah. So please choose main market. Cuma main market jangan pilih Ace ataupun lead market ni. Cuma ni dia tak split by categories dia just by alphabetical orders. So to find, maybe kita boleh sekejap Right, so bear with me sekejap tadi sini. Okay, so ni Bursa Malaysia punya, sorry bukan Bursa Malaysia, The Star punya portal lah under the business sections, under the market watch section. These are the sectors. Kita ada healthcare, energy, technology. So choose any of these. Okay, but for me, please try don't use finance services lah. Because macam banks tu susah sikit nak measure dia punya ratio. So because they have the different ratios. Okay, try to exclude finance services. But when I said for in the members, tapi I guna finance services as an example lah. Okay, sebab tak boleh siapa pun boleh guna finance services kan. So when you klik je finance services tu, kita akan tengok ada banyak companies dalam industri ni. Cuma dia finance dia termasuklah the banks, the insurance company, the terkaful and whatnot. So try to choose the similar industry. So maknanya kalau banks for example, so pilih 4 company, contohnya FIN, Bank, Bank Islam, CIMB, Bank contohnya lah. But again, don't use finance services lah. You choose other companies. Banyak ni. 1, 2, 4, 5, 7. So all of you have enough sebab kita ada 7, maximum 8 groups je kot. For group, all group A kan, group A. So choose any of these lah, healthcare contohnya. So ada banyak company kat sini. So pilih lah mana yang relevan, Pharma Niaga versus KPG versus di Pharma. Okay, so yeah, then we can compare lah performance nanti. So in terms of the decisions, so you can book ataupun it will be based on first come first serve basis. So siapa yang book industry tu first, dia boleh pilih industri tu dan pilih 4 company within the same industry for comparison purposes. Okay, so it's 12:01. So technically, yeah, that's the end of ratios lah. I just want to talk about that. So nanti ada satu lagi limitation, nanti baca lah. This is just theory parts whereby obviously ratios are not perfect. So these are the limitations that can happen when we do financial ratios analysis. Okay. Right. So let's take a few minutes break before we move on to topic number 4. So I nak try to masuk topic number 4. But obviously kita takkan habiskan topic 4 everything lah today sebab agak panjang juga. So I will try to cover at least one part of this topic number 4. But before that, let's take a short break kejap before we move on to topic number 4. All right, let's continue with topic number 4, okay? Okay, so for topic number 4, it's about financial forecasting and planning. So from the word forecasting and planning, we know this is something that we need to do for the future. Okay, something yang yet to happen. So if you compare against, for example, financial ratios just now, semuanya based on historical data yang dah lepas, and based on historical performance. Okay, but for this forecasting and also financial planning, we are preparing something for the future. Okay, something yang yet to happen, as I said. So we have two methods here. First, we have cash budget, and second is method of forecasting, or usually selalunya kita gunakan the terms gonna prepare the Proforma or financial statement. Okay, as you recall, financial statement ni refers to balance sheet dengan income statement, right? So we're gonna forecast or prepare the Proforma for both statements, financial statements and for the statement of financial position dengan income statement. Okay, so since we have about 40 minutes, 35, 40 minutes. Obviously, we cannot finish both. And out of these two, I think method of forecasting is slightly faster to explain. Okay, shorter time required. So I'm going to skip cash budget for today. I'm going to go straight to 4.2 method of forecasting. And cash budget kita akan continue next meeting lah. Meeting yang ketiga, seminar 3. So as I said, financial forecasting and planning, basically a process of estimating future financing requirements. Okay, so both parts, either cash budget ke, Proforma ke, we are actually trying to find whether the company might require future financing requirements. So maknanya they might have to borrow. Okay, they might have to borrow. So meaning before the actual year datang, we can prepare our forecasting sekarang, and by now we can know for sure next year whether we need to borrow money or not, or else, yeah, we need to do something about it lah. Okay, how to prepare with the borrowings. Okay, so as I said, there are two methods, but for today we're going to go straight to Proforma first. Okay, Proforma financial statement. So I'm going to skip all this, cash budget semua I akan skip dulu, and I'm going to go with this method of forecasting. Okay, ataupun Proforma financial statements. So as I said, there are two types of financial statements. Kita ada balance sheet ataupun statement of financial position tadi. Okay. Okay. Or the Proforma income statement. But for us, okay, to be honest with you, I'm going to focus only on this one je. So to make it easier to you, kita gunakan Proforma balance sheet saja. Alright, to prepare the statement of financial positions, or Proforma statement of financial positions. And for Proforma income statement, kita akan simplify it. Okay, because the nature of Proforma income statement, we are actually trying to find one figure je. And alternative, instead of we do all the income statement, we just gonna use a ratio to get that value, and that value will be transferred into our balance sheets. Okay, and the method of forecasting, kita akan gunakan what we call as percent of sales method. Percent of sales method. Okay, so what does it mean? We're gonna assume selalunya company will expect the sales will grow next year by a certain percentage, let's say 10%. Okay, katakanlah company nak grow their sales by 10% next year. So when we do this method of forecasting, we're gonna assume ataupun we're gonna estimate the value of their assets, liabilities will increase by the same percentage. So that's why kita katakan gunakan percent of sales method. So that percent of sales will be used as our benchmark, let's say 10% tadi. So we're going to project the level of investments based on that value. Okay, so by having that increment in terms of investment, Okay, so investment ni boleh di-measure menggunakan their assets lah. So if their assets increase next year, we know they need to invest a certain amount of portion as their investment. Okay, and next question would be, if we have to invest, where should the money comes from? Okay, macam ni kan kita ada assets, liabilities and equity. So when we talk about percent of sales method, katakan the company wants to increase their sales next year. So when they want to increase next year, we need to increase our assets. And assets increment is actually investment. We need to invest in our asset. It can be in the form of kita punya fixed assets. You have to involve with our current assets as well. So bila kita increasekan assets, obviously we need to know where the money comes from. Adakah menggunakan hutang, liabilities, or using the owner's money, equity. Okay, so this is our basically basically our target to identify which are the sources. Okay, and the sources can be divided into two. Okay, either internal sources, which is considered as spontaneous, or using the external sources, which is non-spontaneous. Okay, so the internal sources usually something yang can control within. Okay, maknanya company can control the movement of internal funds ni by themselves. Whereas kalau external, nama pun external kan, so they have to rely on others from outside of the company. So for external sources, he can borrow from the bank, they can issue bond, for example, issue new shares, for example. So all of those funds datang daripada external. Okay, so this is what we will decide later. Sebab ingat why we do method of forecasting is for financing purposes, borrowing purposes. So by having this internal external segregation, then we can know which are the amounts yang required. Okay, so at the end of the day, under our Proforma balance sheets, we try to estimate this value, additional funds needed. And most of the time, kita tak guna internal we're gonna focus on the external parts. Additional funds needed usually datang from external sources. Okay, so to illustrate to you how to do this, I'm gonna use one example. Ada tak dalam ni? Okay, so ni contoh soalan Proforma yang B kat bawah ni. So we have one company here, MGA Pty Limited. Alright, and this is the current one, statement of financial position as at 2017. So this is the current year. So remember, we are trying to forecast dia punya positions. And untuk soalan Proforma ni, memang dia akan bagi one set for the current year. So besides this statement of financial position, they give you a list of assumptions. Okay, dia beritahu, for example, in 2017, which is the current one, the sales are 500,000. So this is the current sales. Then dia beritahu pasal it's reached full capacity. I will explain what's the purpose of this. And then dia ada dividend payout ratio dia. The company paid out 2.5% dividend. So this is the dividend payout ratio. Remember ratio just now, kita ada dividend payout ratio kan. So we have 2.5% dividend. And dia ada net profit margin. Again, this is another ratio. Net profit margin dia 5%. Okay. Dividend payout ratio, if you remember, formula dia is dividend divided by net profit. Net profit margin is net profit divided by sales, because margin is sales kan. Right, but for this question, you don't have to worry because dia dah bagi in percentage. And the question asks how much additional financing needed. So this is the AFN. This is the AFN that we need to find. Okay, soalan pun spesifik tanya how much is AFN. Okay, and the assumption again, dia suruh target the sales to increase by 20%. Okay, so this would be our thesis. Okay, it will increase by 20%. So first thing, when we want to prepare the statement of the Proforma of statement of financial position, we need to know how the sales increment to by berapa percent. Okay, so one of the way, the question might give you straight away like this. Okay, dia bagi you straight away like this. Okay, then we're gonna use this 20% lah. So percent dia changes dia equivalent to 20%. Right. So this is one of the way. But alternatively, soalan boleh je tak bagi 20% ni. But how you want to find this 20%? Katakan kalau dia tak bagi if they don't give you this 20% directly like this, they will give you 2 years of sales. Okay, here dia bagi 2017 sales 500,000. Okay, alternatively dia boleh cakap, okay, in 2018 the sales are expected to be, katakanlah to be 600,000. Okay, so beside dia lah, instead of bagi 20%, dia bagi you 2 tahun. So 2017 500,000, 2018 600,000. But still you need to find berapa persen. But that's our first point. Kita kena tahu berapa persen dia increase. So to find this percent changes of sales ni, okay, alternatively ataupun if the question doesn't provide you with this percentage whereby you need to find your own, you're gonna use the two sales punya information. Okay, maknanya from 500 increase to 600. We want to know how much percent sebenarnya from 500 to 600. So to measure that, we can use a simple mathematic formula whereby we find the difference. So kita nak tahu berapa persen dia berubah. So kita find the difference, kita ambil the new, which is 600,000. We minus with the old sales amount, which is 500,000. And we divide with the old value. Okay, because we want to compare from the original values. Berapa perubahan dia as compared to the original values. So based on this question, 600 minus 500, and then you divide with 500,000, you're going to get 20% as well. Ini contoh je lah, saya gunakan figure yang sama je. So you get 20% as well. So then baru you boleh gunakan 20% as your basis for changes. Okay, so I recap there are two possible ways based on question. So tak semestinya dia akan always bagi direct like this. They can give you 2 years of sales as well. Okay, but whatever it is, first you need to find this 20%, the percentage ni kena tahu. Secondly, you need to know the new sales as well. So bila 500,000 2017, you increase by 20%, you're gonna get 600,000. Okay, so for 2018, we know the sales is 600,000. So we need to know these three information: current sales, future sales, and also the increment berapa percent. Okay, so dia akan hilangkan salah satu information. Obviously the current sales dia akan bagilah. Dia akan hilangkan either the percentage or dia akan hilangkan the value of next year's sales. Okay, but you can find any of these two using the simple formula. Alright. Okay, now we settle with 20% increments. Okay, kita dah tahu this would be our increment of 20%. So how to increase ataupun how to forecast our statements? Right. So remember last time as a ratio pun I like to segregate my sections. Okay. So this is a test again to ensure that you understand and also know the categories. Okay, so this part from cash anti inventories, this is your current assets. Okay, net plant equipment dengan land, this is your fixed assets. Account payable sampai taxes payable, this is your current liabilities. Bond is your long-term liabilities. And the bottom three here is your equity. Okay, so by now I hope you can identify the items belong to which category, or else you might wrongly calculate this. Okay, now I'm gonna use again the whiteboard. Right, so kita first nak tahu ni je percentage ni. Once we know, we can straight away calculate. Maknanya we can straight away prepare the statements. Okay, in order to prepare the statement, obviously we have to include the title. Okay, title ni very important. Okay, just copy balik lah. The company is MGA Ptd. Ltd. Okay, that's the name of the company, and we are preparing for the Proforma. Proforma statement of financial position. Okay, asset 31st December. Okay, so the question provided us to 2017 kan. So we are actually preparing for 2018, and this is in ringgit. Okay, so basically this is the title of the statement. Okay, you boleh tulis in one row macam soalan ni if you want. Cuma tak muat tadi, I letak kat bawah lah, but yeah, this is how the statement will looks like. Cuma tambah perkataan Proforma in front, and then the year tu you move 1 year ahead. Okay. So how to increase? How to prepare for the new ones? Okay. Again, for Proforma statement of financial position, you don't have to memorize the template ataupun the format. We're gonna use the ones in the question. Sebab soalan memang akan bagi. So we're gonna use everything back from the question, cuma with the different figures because we estimate the new ones. Okay, so first kita akan tengok by section. First section is the current assets. Okay, so current assets we have 4 items. Okay, so for current assets, this is the rule. Untuk current assets, we are going to increase the values, each of these values, by 20%. Okay, by 20%. So that's why to know the percentage ni really important. Okay, kalau soalan bagi direct macam ni, then you have no problem lah sebab mesti you dapat 20% betul. But I just warn you pasal kalau you have to find your own. Okay, so just be careful with the formula. New minus old divided by old in order to get the percent of sales. Okay, the changes. Okay, so we're gonna increase it by these changes, which is 20%. Okay, untuk soalan ni 20% is not always 20%. Tengok soalan. Right, so for example, we start with cash. So cash original 53,000. So you increase by 30%. You're gonna have new cash values of 63,600 ringgit. Okay, we increase by 20%. And then we have prepaid expenses. Okay, prepaid expenses original 36,000. Increase 20%, you will be 43,200 ringgit. Okay, move on to account receivable. Original 55,000. We increase by again 20%. So we have new account receivable of 66,000. Okay, 66,000. And the fourth one, inventories. Okay, 82,000, increased by 20%. So our new inventories would be 98,400 ringgit. Okay, so that's our first section, current asset. So current assets, very straightforward. We just increase it. No rules, no whatever. We just increase by the percentage. Okay, so all of these figures will have increment of 20% each. Okay, from the original values. Okay, straightforward. Untuk current assets, we just increase everything by the 20%. Okay, next we move on to the second section, which is the fixed asset. Okay, so fixed asset, how the statements looks like, either dia bagi split macam ni dia bagi details, net plant, equipment, land, or you bear with me kejap, ni contoh satu lagi, balance sheet ataupun statement of financial position, whereby they just give you a total ataupun group as fixed asset sahaja. Okay, we're gonna have we might have a different interpretation kat sini. Okay, so what would be the treatment untuk fixed asset? Kita cerita pasal general tu. For fixed assets, we are going to increase juga by 20%, but subject to one condition. There are the condition before we can increase. Okay, we are going to increase the relevant fixed asset if if ada statement dia beritahu if it has reached its full capacity. Okay, dia beritahu dia dah reach full capacity, ataupun sometimes they use the word maximum capacity. Dia dah sampai maximum capacity. So what does it mean kalau dia dah sampai maximum capacity? It means that the current machines or whatever assets that they have, they dah fully maximize. So meaning if you want to increase our sales next year, we cannot use our current ataupun existing equipment anymore because kita dah fully utilize. Okay, so if this is the case, macam soalan ni, it has reached maximum ataupun full capacity, what we're going to do, we're going to increase the relevant fixed asset yang terlibat dengan operations by 20%. So here kita ada dua fixed asset, net plant dengan land. Obviously net plant equipment involved directly with operation sebab equipment kan part of operation, plant ni kilang dia. So obviously in order to increase, kita kena increase net plant equipment. Tetapi land ni just fixed asset, maybe tak ada kena-mengena dengan operation dia. So therefore for land is not part of the capacity portion. So therefore this amount 40,000 akan remain constant. Okay, so I recap balik. For maximum capacity, we're going to increase assets ataupun fixed assets yang relevant, which is net plant and equipment, which is this part kita akan increasekan. By how much? By 20%. Okay, but land is not relevant, so therefore land akan remain the same. Tetapi, kalau soalan bagi you one lump sum figure like this gross fixed asset, we don't know which part dalam fixed asset ni items je. So if this is the case, kalau dia bagi general like this, we're going to increase the whole amount. Okay, we're going to increase by 20% jugalah. Okay, kalau again syarat dia must reach full capacity. So alternatively, soalan boleh kata the company has not reached full capacity. So ada perkataan not kat situ. So kalau has not reached full capacity, what happened? This net plant equipment akan remain constant and land obviously akan remain constant jugalah. So dia tak akan berubah kalau dia tak reach full capacity. So I recap. If it has not reached full capacity, these items will remain constant. So kalau dia bagi general fixed asset juga pun dia akan remain constant. Okay, so the keyword here is to look for the word capacity. Okay, either they use word full ataupun maximum capacity. Okay, kalau reach, you increase. Kalau tak reach lagi, it will remain the same, remain constant. So in this case, dia dah full capacity kan. So therefore, our net plant and equipment will increase. Okay, will increase by 20%. So our new net plant would be 96,000. But for land, since I said this is not part of operation, just gonna takkan naik sales kita kena beli tanah baru kan, so tak ada kena-mengena. So land is not relevant in this case, so land will remain constant. Okay, that's about it. In our assets tak ada item lain, so we gonna totalkan dia. So this would be our total asset. So 63.6 plus 3.2 plus 66,000 plus 98 or plus 96,000 plus 40,000. So you're gonna have a new total assets figure 407,200. Okay, so this is our new total assets. Okay, our new total asset is 407,200 ringgit. So what does it mean? What can we conclude so far? So original total asset worth 346,000, but in order to increase 20% sales next year, they have to increase their sales to 407,200. So kalau you cari the difference, 407.2 minus 346. So you're gonna have an investment sebanyak 61,200 ringgit. Okay, so this is the amount of investment that they need to make. What kind of investment? They kena increasekan dia punya share, dia punya cash. They kena increase their sales in order to have higher account receivables. They have to stock more. They have to invest in new plant and equipment. So total bernilai 61,200 ringgit. So the next question would be, where to get this 61,200 ringgit? Okay, ingat this is all forecast. This is belum berlaku lagi, walaupun ini 2018 dah berlaku, tapi imagine this is for 2022 lah contohnya. Okay, it haven't happened yet, but we need to know, we need to invest next year by this much, and we need to forecast where to get this money from. Okay, and if you remember the sources just now, we have internal versus external. So the funding part comes from this right hand side. Okay, kalau you ingat, kat atas ni hutang liabilities, kat bawah ni equity. And ada yang internally control, ada yang from external. Okay, so the third section would be current liabilities. So I like to do that flow from current assets, kita listkan, all will increase, no rules whatsoever, kita increasekan je by 20%. For fixed asset, it depends on capacity, whether it's max or not. Okay, and kita akan increasekan mana yang relevant je. Okay, kalau dia split macam ni, hanya net plant equipment yang relevant. Kalau dia bagi general, we're going to increase the whole thing by the same rates. Okay, now we move on to the third section. The third section is current liabilities. Okay, so for current liabilities, okay, rule dia very simple. Quite similar macam current assets, kita akan increasekan semua item dalam current liabilities kecuali with one exception. We are not going to increase our notes payable. Okay, notes payable will remain the same. Why notes payable remain the same? Because notes payable, if you remember, this is short-term loans, short-term bank loans. So bank loans are external. Okay, walaupun ni short-term kan, sesuai dia masuk dalam current liabilities, tapi ni datang daripada luar, from external. So therefore, those with external punya sources, the non-spontaneous akan remain constant. Okay, all external sources will remain constant. So for current liabilities, yang external hanyalah notes payable. So notes payable akan remain constant, but the rest akan increase by 20% juga. So therefore, for account payable, 58,000 original, it will increase by 20%. So it will be 69,600. For notes payable, it will remain constant, 35,000. You don't have to increase it, it will remain constant. Tax payable, okay, taxes payable, okay, this is something that we can control, so we're gonna increase by 20%, 24,000. Okay, so that's current liabilities, 3 item je. We're going to increase everything except for notes payable. So notes payable akan remain constant, tak berubah. We're going to copy from the question. So we left with long-term liabilities and equity. So for the final two parts ni, I akan generalize je lah what we're going to do. For long-term liabilities and equity, we are going to copy everything from the question, meaning everything will remain constant. Okay, for whatever amount from the question, we're going to copy it back from our Proforma ataupun into our Proforma. So for example, bond, next one. Okay, bond long-term liabilities, original 21, it will be 21 juga, remain the same. Next, we have preferred stock. Okay, preferred stock, 45,000. Okay, and then we have common stock. Common stock, 130,000. Okay, remain the same. And we have retained earning, last one. Okay, so retained earning ni pun I nak letak remark kat sini, tak tanda apa, tanda plus lah. Okay. So retained earning will be the one yang akan determine how much actually the requirement later on. Okay, because retained earning is part of equity. However, the retained earning will change. Okay, kalau you perasan tadi, long term dengan equity remain constant kan? But for retained earning, it will change. Okay, but they will not change according to the 20%. It's not as simple as 37,000 increased by 20%, no. For retained earning, we need to calculate the actual new retained earnings. So that's why, if you remember again, based on my explanation earlier, we should have supposedly 2 statements. balance sheet and income statement punya Proforma, right? But I don't do Proforma income statement. Okay, because in Proforma income statement, let me share with you. The one that we want to find, so this is Proforma income statement. The one yang kita nak is actually this part je, the retained earnings section. Okay, so kalau you tengok this triangle of ataupun the three items here, this supposed to remind you about net profit, dividend, retained earning. Kan? Net profit, earning after tax, tolak dividend, dapat retained earning. So we are actually trying to find this part je, retained earning. Okay, because retained earning dia accumulative. So we want to know the new retained earning for that particular year. So kalau kita tak buat income statement, how to find this retained earning? So the alternative way is by using formula. So what formula? This formula. The new retained earning formula. New retained earnings formula. So it consists of 4 items. Ada 4 items kat sini. So I may add one big bracket kat sini. So what are the items? First, we need to know the original retained earnings. This is original retained earnings meanings from the question. So the label 0 dengan 1 ni indicates 0 tu the original, 1 ni is the expected. Okay, so RE0. So dalam soalan ni, the RE0 dia ni lah, 400,000 kot. Okay. But in our case tadi berapa? Sekejap lagi kita tengok lah, the original retained earnings. And then we need to add with the ones in the bracket. So actually, the ones in the bracket is to find the new retained earning ataupun the retained earning for the year. So it consists of 3 items. First is S1. S ni sales, sales for the next year ataupun the forecasted sales. Based on our question earlier, the forecasted sales is 600,000. S1 is 600,000. And then we need to know the net profit margin. Okay, the net profit margin is given in the question. And then multiply with 1 minus DPR. Okay, if you see 1 by 1 here, this is actually referring to this relationship between net profit, dividend, and retained earning. How so? Okay, let me show you. First, look at these two, sales dengan net profit margin. And again, kalau you ingat just study je, explain the first hour of our class. Net profit margin equals to net profit divided by sales. Okay, net profit divided by sales. So if we know the net profit margin and we know the sales, ni sales kan? So bila you multiply ni, you darab ni, net profit margin darab dengan sales, you are finding the net profits. You akan dapat the net profit. So you akan dapat this section lah. You akan dapat this one, net profit. So the first 2 items, bila you multiply, this is expected sales. This is the margins. Bila you multiply, you akan dapat the expected net profits. And bila you dah dapat the estimated net profit, and you darab 1 minus DPR. Okay, again kalau you ingat DPR from the earlier section ataupun earlier topics tadi, kita ada dividend divided by net profit. Yang bagi example tadi 100 million kat sini, 30 million kan. So you divide, dapat dividend payout ratio. So if you have this dividend payout ratio of 30% tadi, bagi example kan, 0.3. So kalau you ambil 1 minus 0.3, you akan dapat 0.7, which is this part, RE. So that's why the formula is 1 minus DPR, meaning kita nak cari sebenarnya the RE portion. So the new RE. So when we have this new RE, add with the existing RE, then we're going to get the combined RE yang baru. Okay, so kalau you tak ingat ataupun tak faham the relationship of everything here yang I mention tadi, you just memorize the formula je lah. Okay, new sales, darab net profit margin, darab 1 minus DPR. Okay, so let's go back to the question. Okay, ada 3 minit lagi ni. So, new RE, new retained earning. I tulis balik soalan dia is RE0, the old RE, plus, okay, I put a bracket, sales 1, sales, forecasted sales, multiply with net profit margin, multiply with 1 minus DPR. Okay, So the formula for NPM DPR I dah showed dalam notes tadi, and you've learned about this in topic number 3 just now. Okay, but for this question, they give you already NPM 5%, DPR 2.5%. So you are lucky lah, tapi ada certain question dia tak bagi. Dia bagi you in figures, you have to find your own NPM, you find your own DPR. Okay, how to find based on the formula I just gave you earlier or based on previous topic. Okay, just kena browse lah, cari balik. So for this question, the RE0 is 37,000. This is from the question, 37,000. And the forecasted sales, berapa tadi? 600,000 kan? From 500, increase 20%, we get 600,000. Okay, so our sales is 600,000. Okay, so expected sales ataupun forecasted sales. The net profit margin is 5%. Where I get this 5% from the question. And for 1 minus DPR, the dividend payout ratio is 2.5%. So minus 2.5%. And try to solve this. So 37,000. And we're going to add with, okay, 600,000 times 5% times 1 minus 0. So you're going to get 29,250. Okay, the whole bracket, you're going to put 29,250. So you add with 37,000. So your new retained earning will be 66,250. Okay, so the original plus the estimated one. And this combined will be part of our new retained earning, which is 66,250. Okay, 66,250. Okay, so we, as you all know, in our balance sheet kan, kalau total asset 407,200, so our total liability and equity gonna have the same amount, 407,200. But can you check with me, tolong kira ni semua ni, calculate from top to bottom, cukup tak 407,200? Dapat tak? Ada tak jawapan? Kalau tak ada, nanti cari sendirilah jawapan dia sama ke tak. Okay, so try to figure out yourself macam mana nak finalisekan yang bawah tadi tu. How to find the additional funds required, and and that will be the final position lah. Dia nak cari tadi kan, dia nak cari what will be the additional finance needed. Okay, try to find yourself macam mana nak cari AFN tu, and to complete the Proforma statement ni macam mana. Alright, so I think that's about it for today. So we're going to continue with the cash budget in next meeting. Okay, next meeting. So after the next meeting tu nanti, then we can prepare for our first test. Okay, first test. Sebab first test akan cover the topic number 4 ni. So topic number 4 ni dia akan keluar for our first test, which is for the cash budget and also for the Proforma statements. Alright, so thank you very much. And as always, I will share the recorded videos via YouTube nanti and I'll give you the link later. So yeah, thank you very much, and I'll see you guys in our next meeting.
Thank you, Doctor.
Thank you, sir.
Thank you, Doctor.